Good morning. Welcome to Nifty Prediction. My name is Narendran. This video is only for education and learning purpose. If you want to buy anything, please consult with your financial planners before buying. Before going to the Friday prediction, I will have to review the Thursday's market. Nifty ended up in the flat positive 18,321.515, 35.75 points in the positive, 0.20% in the positive. Pre-opening was 18,268.90, which was well inside the to volatile zone, so which means it is in the volatile zone 18,268, so it was in the range as well. So initially what happens is it was struggled a bit, it was seeing around 60 points initial stage, later it fall down a bit, and then in the last 1.5 hours it was started to go bullish. um, so it was exactly matched, the low was exactly matched in the stop loss of our data, 18,002 12 minus 10 points. We specifically told about this as well. If this particular key level is not breaking, then Nifty has potential to go bullish. So that exactly it was matched with the 0.14%. I mean 1.14 point was not broken on that particular level. So it has kept perfectly low and then start to go towards the bullish, and then the high is also matched 18,338, which is in the pivot level 18,338. So both side matching, and if you joined in our group, you will also came to know about the data, because after the market opening 9:43 itself a target was opened, 18,311.91 new positive set target opened. But due to one evenly poised day, sometimes it will keep pending, so that the fake fall happened, and then initially Nifty was kept the low here. Then once again a new target also opened a little later, that is also broken. This particular 18,212 new low side target open. So once after closing and kept perfectly, then only started to go towards to this positive side target 18,311. So what we done is we taken small call option and put option together, and we booked a profit both sides. Put option 18,200, we bought it somewhere around uh, 10, and we booked it somewhere around 20, and then we bought it 18,250 and 200 once again with the combination around 113. So it was went around 80, 18,250 was went around 80 both together. These two at that particular time, it was around 12 to 13. So let's take, even if it is 13, the total investment is only 26 rupees together on the both sides, and the call option went around 80 points. It went around because we specifically asked to wait as well. So you can, if you join, you will get those kind of ideas as well. Let's go to the prediction for Friday. And the data which shows we have one bullish warning signal. So we knew that a bullish warning signal rule comes means 80% of the time a fake up will go, then after that a strong fall will happen. So one bullish warning signal means a fake up will go, then strong fall will happen. So watch out. So one put option, keep it at as a hero zero buy on raise method. So hero zero, if you can buy, and initial stage itself you can buy and keep, but buy on raise method, if you bought any put option, you need to keep 50% stop loss. For example, if you bought it 100 points, if you bought, keep stop loss at 50. So this is the risk we can take. So stop loss at 50 you need to maintain, so 50% risk we can take. So if it is falls on heavily, this might 100 go to even 300, like that. So because this type of day has potential to fall down heavily, and we have heavy downside target as well. So for example, the positive side target we have around 120 points. If pre-opening is somewhere around 60 70 and fake up is going towards to 18.4 41 from that particular level, particular level, if it is falls down towards to 18 158. So how much point it is going to fall? Almost 300 points. That is how this particular put option might go towards to 300 or even beyond that level. So this is a calculated risk we can take. On the other hand, if the fall is not happening, the fake up is going and then started to fall down, and still if it is low matching, then it might recover once again. So that is where we are keeping stop loss as well. So in zero zero, if you're making, that is fine. So in 20% of the time, it might react like this after a up. Then it started to fall down, but still the low is matching perfectly. Then once again, it might recover as well towards to go towards to 18,700. So we still, because it is in the monthly target, so we still need to wait how the pre-opening is going to be and where the low is going to match. According to that, we can trade. But as per one bullish warning signal, those are all the rules. But the indicators, all three bearish with one volatile. So volatile, if it is comes, means we need to play with the hedging method, because of that volatile indicating it still has potential to go zigzag or any direction towards to any level. So there is a potential to go volatile, but we still have pending target positive side to 18,441. I'll take both as same because there is a difference of 4 points only. So we will talk about 18,441, and then initially for the downside target 18,158. Once if it is breaking, then we can focus on 18,597 and 548, those levels. Let's go to the basic rules. Anything above the volatile level 1 minus 0.02%, 3.16 points, 18,003, 17.4, and anything above this level, Nifty is in the bullish zone, so you can bet one call option as a hero zero. Anything below the volatile to 0.85%, 155.73, 18,165.42, anything below this level, you can buy one put option as a hero zero. If anything in between the volatile level 1 and volatile level 2, if pre-opening is in between those two levels, it is in the volatile zone, so you need to buy hedging method, and volatile stop loss for the bearish from this particular level plus 10 points. If Nifty is not breaking, then Nifty has potential to fall down, and volatile stop loss for the bullish from this level minus 10 points. If Nifty is not breaking the low, then Nifty has potential to go bullish. These are all the basic rules as well. And then the other basic rule, which is support level 1 and resistance level 1. Anything if pre-opening is not breaking the low support level 1 minus 10 points, then Nifty has potential to go extremely bullish towards to any side. Likewise, the same resistance level 1, anything Nifty is not breaking plus 10 points from resistance level 1 high is not able to break, then Nifty is having potential to fall down heavily towards to extreme bearish or any up to any level. So these are all the other basic levels. And we have a 80% target on the negative side, which is minus 1.49%. I forgot to mention in my summary as well, just now saw it. So minus 272.99, 18,048. Up to that level, we have a 80% target in the negative side around 272 points. So Nifty still has potential to fall down towards to 18,004, 18,048.16, so that Nifty has potential to fall down. But the condition is pre-opening must have to be in the negative. If pre-opening is in the negative, there is a potential to fall down this particular level. So one put option you can keep in hand for this as well. If pre-opening is in the positive, means the chances will become 50-50. So we need to still play with 0 0 like that. So sometimes it might fail as well. So if pre-opening is in the positive, means the chances of hitting this level become 50-50, and sometimes it might fail. But and the pre-opening is in the if pre-opening is in the negative means the chances are there to reach this particular level 80% of the time. So out of 10 days, 8 days it is hitting, there is a 20% chances of failure. That is what is pre-opening is in the negative or not. We need to check for this particular target to force. If it is pre-opening is the negative, one put option you can buy as a hero zero or take chances to focus on 18,048 level. But there are some interesting points out there because we have so many negatives hit target which is 1.2% to 1.74%, which means 200 points, 220 points to 320 points range. But after that, there is a huge gap. If, for example, 18,002 not, I mean 18,002.36 minus 10 points is breaking, then 18,002.36 minus 10 points. If low is breaking this particular level on this particular day, what happens is 17,992.36 is breaking, then automatically the downside target will open, which is 17,639. So huge fall will happen. Nifty might fall down 600 to 700 points just like that. So watch out this key level. We may not know whether Nifty is going to fall up to this level, but if it is happens, then the new target will open. Nifty on the same day it has potential to fall down heavily. Once if it is fall breaking this particular 39.60 minus 10 points, then the next target will open, which is 17 to 76. Huge fall after 681, then 1000 points also having potential. So this is the which is called once in a lifetime scenario. It is there. So keep one put option always in hand. Even 5 points put option will be handy. So because the risk is you are taking 250 rupees, so this is not going to harm you even if it is goes loss. So 5 point small put option or up to your risk appetite, you can keep put option uh, in hand is advisable. On this particular day we may not know what kind of a fall we will get, so you need to keep it in hand, one put option. And as per the par value rule, anything above the par value, Nifty tried to go towards to bullish, which is 387 points, 18,708. But as per the volatile rule, positive target 2 to negative target 2 up to flat positive to 800 points negative is there. So it is still has potential to fall down 17,501 up to that level showing. So one put option 0 is handy, and anything above 17,821 Nifty will try to go towards to bullish. Nifty is in control on the bullish, but still it is showing flat closing on the positive side or complete flat, but there is a potential to close in the negative 249 points up to 18,071 level. So negative closing is still possibility showing even though bullish is taking control, but as per the data. So the closing numbers which we have, the key level which is 18,275. Anything below this level it will try to close down on the negative side. Anything above this level it will try to close in the positive range. So as per the SGX Nifty, where the Nifty is, so according to that we can able to at this point of time minus 43 points it is showing. So if we take minus 43 points, then where the Nifty is going to align, we can just project. So Nifty is going to be in the volatile zone. So we need to watch out where the high and low is going to keep. So if for example from this particular level, if it is keeping somewhere high in the bearish level, or we have positive side target which is 1840, I mean 18,443 to 18,000. So these levels if it is keeping high like that, let's take an example. So negative side from here to that particular level, so low is going to be 18,236, and high is going to be 18,440 level. So uh, almost close to 119 points to minus 84 points. This is the example I'm taking. So Nifty is open. We may not know whether it is going to open in the positive 80, 90 or whatever the price, or 43 points as per the exchange 50 showing. We just projecting here it is a high and here it is a low, so that the average price which shows 18,347, 18,347. So 18,347, so which is going to be in the mid bullish range. So Nifty is aligning at this particular level closing number, but according to the high is breaking or low is breaking, then this particular number will change towards to next level. So how many multiple times it is breaking, according to that it will change. So it might close somewhere in the flat or flat bearish or in the flat bullish. If it is low breaking multiple times, means if it is breaking high a single time or certain like that, it will go towards the bullish. If it is breaking completely multiple times, then it might go to even extreme bullish zone. So watch out those key levels as well. And the summary, we have three bearish warning signal, one volatile, and we have one bullish warning signal. This is bullish warning signal. So bullish warning signal means we need to give it as a green. And as per one bullish warning signal, 80% of the time fake up will go and fall down. That is what this indicator is. So 20% failure ratio is there. So keep PE put option as a hero 0 and 50% stop loss level. If you are buying little higher range, means 50. If you are buying 100 points put option, you need to keep 50 points level stop loss. And we have target on both sides as well, and the positive average and the negative average, which is having good number both sides around 2.8, and negative side 302, both together around 5-10 points. So hedging method will be advisable, but anything above this level, Nifty is in the bullish zone. Anything below this level, Nifty is in the bearish zone. So according to that, one put option or call option, you can buy euro 0. And as per the CPR, Nifty is in the bullish, but still we have volatile, so you need to go with the hedging method. So the conclusion is, due to one volatile, we must have to go with the hedging method, um, equally 100 points minimum. And as per the one bullish warning rule, one put option as a hero zero you need to keep, or if you're buying put option as a little higher value, you need to keep stop loss around 50% of it. If it is 100, you need to keep stop loss around 50 points level. So this is the method. Let's see how the market is going to give us on Friday.